Michael Cochran here with BentOak Capital to provide our March 2023 market update. Please remember to stay tuned at the end of this video for a required disclosure statement. Financial markets have experienced quite a bit of change this year in just 2 short months. We started the year hopeful that stocks would benefit from a better economic and monetary policy environment by the spring, but recent developments suggest that may be further out than we initially thought. We remain confident that a new bull market will come. It just may require a bit more of our patience before we get there. When 2023 began, we had hoped for a bull market to bloom in the spring, prompted by the end of the Federal Reserve's interest rate hiking campaign. Following recent data pointing to stronger growth and higher inflation, rate hikes may extend into the summer and potentially delay the start of a new bull market. Against that backdrop, even though stocks pulled back in February, this year's modest 2-month gain for the S&P 500 feels like a victory. Recent evidence of consumer resilience has been encouraging. Over 500 jobs were created in January and just over 300,000 in February. The unemployment rate is at its lowest level since the 1960s. Retail sales rose a better than expected 3% in January, month over month, as consumers benefited from a healthy job market and excess savings, while motivated by the diminished COVID-19 threat. However, that consumer strength was accompanied by a series of hotter than expected inflation reports for January, fueling more concerns about higher interest rates and in turn weighing on the stock market. The first half of March has been filled with headlines on a number of fronts. The biggest of these was Silicon Valley Bank falling into FDIC receivership. It is not surprising, but this news caused the public to speculate if there will be another shoe to drop, and many recalling the 2008-2009 timeframe. The distinctive contributors of Silicon Valley Bank's downfall was its niche clientele and its balance sheet mismanagement. Meanwhile, the government's actions to backstop deposits and provide short-term funding to banks that need it greatly reduced the odds of a systemic crisis. We may see a bit more market volatility than we would like in the short term, and will continue to closely monitor this going forward. We remain steadfast in our belief that investors' patience will be rewarded. As Warren Buffett wrote in his latest annual letter to shareholders, quote, "There is yet to see a time when it made sense to make a long-term bet against America. Stocks have generated annualized returns over 9% since the advent of the S&P 500's predecessor index, the S&P 90, back in 1927, and that includes the Great Depression, World War II, the dot-com crash, the 2008-2009 financial crisis, 9/11, and numerous other economic and geopolitical shocks. Stocks may be volatile until the direction and ultimate destination of interest rates becomes clearer, and history shows that when we zoom out and focus on broader patterns while anticipating and positioning for short-term choppiness, this can increase the likelihood of achieving your financial goals. In closing, the next bull market may not arrive in time for spring, but stocks may still ramp up this summer as inflation eases and the Fed finally hits pause on rate hikes. That wraps up this month's video, but please visit the Resources tab on our website for several new blog posts and videos, along with the client letter that was recently emailed out. We continue our commitment to being here for our clients in any market and economic environment. And if you have any questions, please feel free to give us a call.